My name's Anthony Kapitanovic. I'm the head of Collins Co Wealth Management. Today I'm joined by our head of investments, Chris Willaton, and we will go through our investment series for the March quarter. Chris, we're a quarter into the year. How are markets travelling?
It's very much a repeat of the same theme we've seen for the past year, I guess, or 2 years even, in the sense that it's stimulus from central banks. It's really been driving share markets. At the same time, we are starting to see more signs of a slowdown in certain parts of the world. Recent data from the US has been a little bit less reassuring than what we had seen last year. The Australian economy has got some concerns at the moment with the significant falls in the price of iron ore and coal, which are our two biggest exports. Despite all of that, though, share markets around the world are getting stronger. We're seeing the US up around record highs, UK, Germany, many countries up near record highs. The Australian market's up 10% so far this year, which is a very strong start to the year. And we're also seeing the Chinese market on fire. It's up 66% in the last 5 months and 26% in the last 5 weeks. So share markets are on fire. Economies are just starting to weaken a little bit.
Now, you mentioned iron ore. A lot of our miners are feeling the pinch at this point. There's a lot of talk by our treasurer suggesting that iron ore could get to $35 a tonne. What impact will that have, particularly on our smaller miners? Are we going to see some go to the wall? And more importantly, BHP Rio, how are they going to benefit?
Well, I think we've already started to see the impact of that in a big way on one company in particular. Atlas Iron is in a lot of strife at the moment. It's suspended its trading on the share market. Doesn't look good for Atlas Iron. There's bound to be various others, not only in Australia but around the world, that are really feeling the pinch. With iron ore prices below $50 per tonne, I think you're going to find even some larger players such as Fortescue, Vale, and certainly I'd say most Chinese iron ore producers are probably going to be well below break even. BHP and Rio, the two low-cost iron ore miners in the world, they're going okay, and this is playing into their hands because they've spent hundreds of billions of dollars on enhancing their productivity over the past few years, over the past 8 years, and they are now shipping records amounts of iron ore to China, and that's at the detriment of a lot of these small iron ore players, and it's pushing down the price of iron ore.
The Reserve Bank only last week surprised most market participants by doing nothing again. Quite surprising. How have you seen that move?
Well, it depends which way you look at it. I think the fact that they moved back in February, I thought that was a bit of a surprise because I think 0.25% doesn't do much to stimulate the economy. I think if they really wanted to stimulate the economy, they needed to do a lot more than that. And the fact that they've held off since then, I think it's been prudent in the sense that they need to have some firepower up their sleeve for when things do get tougher. And I think things will get tougher in the next 12 to 24 months in Australia. And I think the Reserve Bank need to have some firepower for that.
Situation in Greece, it's back. Probably didn't go anywhere to start with. Looks like an exit from the European Union is inevitable. What are your views there?
Oh, look, in many ways, people keep saying it's back, but I think you alluded to before the fact that it never really left. They've always had issues. It always seemed unsustainable. And my view has been for a long time that it's a matter of time before Greece exit the euro. And I think that we're now inching closer towards that. I don't think it'll necessarily happen in the next few months, but I think the final act is going to be that Greece leaves the Eurozone. I mean, even now with the new government in Greece, they're engaging in a lot of, games with their European creditors and the IMF, and I don't think that puts Greece in a good light on the world stage. But the bottom line is they don't have enough money. They're not prepared to compromise to the extent that the IMF and their creditors want them to. And I think there's only one way out, but that might still take 2 years, 3 years before that unfolds.
And is that likely to have a major impact on any of the European economies, namely Germany, I suppose?
Look, the jury's out. I think most people agree now that a Greek exit isn't going to be a huge disruption to the world economy and to Europe in particular. That said, no one really knows. 5 years ago, 3 years ago, people were panicking about the prospect of Greece leaving. I think the world's on more stable footing now, particularly Europe is on more stable footing now. And I think people are comfortable with the idea of Greece leaving, and there's a lot of talk that the Germans and the Greeks are already making plans for that exit. But I don't think at this point it's going to have a huge impact. But, there's always that X factor.
Two things I'd like you to comment on if you can. Obviously, we hold a lot of companies in our portfolios that are either US based or derive earnings from the US. The Aussie dollar now at mid-70s versus the US dollar. What impact is that likely to have on those companies that we hold specifically? And I really want you to comment on the D word.
Yeah, okay. Well, I mean, again, this is a theme that's been playing out for the past year or so while the Australian dollar's been falling. And the Australian dollar started last year at about 90 odd cents, 89 cents, now down around 75, 76. I think expectations are that it'll be closer to 70 by the end of the year. I think we'll see a 6 in front of it at some point within the next 18 months. So that's played out nicely for the likes of Amcor, Ansell, CSL, Macquarie Bank, Westfield, QBE. They've all had stellar runs on the market in the last 3 months, 12 months. A lot of it's been driven by restructuring within those individual businesses, but any company that's deriving revenues from offshore, predominantly from offshore, has been generally doing reasonably well. The share price of those companies has generally been doing reasonably well over the last few years. In terms of deflation, that's been a big fear throughout Europe for the past several years, and people have been muttering it for the past sort of 5 or 6 years in the US as well. Inflation is very low around the world, and the big risk with deflation, particularly in a world where we've got a lot of debt, the big risk with deflation is that the value of assets and earning ability does fall, but the debt remains constant in nominal terms. And the world has added something like about $100 trillion, 100 trillion with a T, in debt since 2007. So that's a lot of debt for the world to be entering a deflationary period with. So that's probably still the biggest concern in the world economy at the moment, and that's why we're seeing, the US for a couple of years embarked on their quantitative easing strategy. We're seeing Europe now commence that. The Japanese are still going through that process at the moment, and that's been largely what's been driving share markets: low interest rates and quantitative easing, and that's all about staving off deflation.
And Chris, finally, speaking of low interest rates, obviously dividend yields are still quite strong. How is that playing out? Well,
I mean, we are seeing the major bank share prices are at the highest levels they have been in several years, and they're all paying dividends that are much higher than the returns you'd be getting in term deposits or cash accounts, and therein lies the appeal of holding bank shares. Also, Telstra is yielding a 5% plus dividend. Add on the franking credits, you're talking about a 7% income off owning those shares. Even BHP, despite the iron ore price fall, or because of the iron ore price fall, BHP is now yielding about 5%. Add on the franking credits, you're talking 7% yield from BHP. So we think that the yield theme is going to support the BHP share price as well.
Yep. Well, thanks very much for your insights once again, Chris. Hope you've all enjoyed this latest investment series video. Until next time, thanks very much.